In this video, learn how to trade a SPAC with tape reading as revealed by three prop traders. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade and the Playbook. In this video, three prop traders and I walk through in tick-by-tick detail how to trade the hottest SPAC in the market with tape reading. Let's get to work on sharing these important trading lessons so you can grow your trading account.
We're going to be going over a trade today in a recent IPO SPAC, KCAC. And for those of you who are unaware, a SPAC is a special purpose acquisition company. They've been very hot for the past few months. And essentially, they raise money through offering up equity in their company and then use that money to later on acquire a different company that isn't public. And then the two merge and that becomes the company you're really trading. These have been very, very hot recently, and the only item in the market that's been hotter than SPACs has been electric vehicle companies. And here we have a trade where a recent SPAC IPO, KCAC, has announced that the company they're acquiring is an EV company led by Bill Gates. So this is huge news. And it's easily the biggest day in the company's short history. In the pre-market, we've already traded more volume than the total amount of volume traded before today in all days combined. So we go up from what was, I think, around $10 closed the previous day to over $16 in the pre-market. And you can see that going into the open, we're consolidating between this 1550 and 1625 area range. For those of us watching it in the pre-market, we've realized that 1550 is an area that has been defended with very, very large bid size twice. And that's something to keep looking for off the open.
Yeah, and so we couldn't get an exact share count, but the float is somewhere around 20 million. So this is going to trade like a bit of a low float. And so at least for me, in general, I have two strategies that I'm using for longs for the front side of these low float names, and one of them is going to involve on the open these things, a low float name gapping up significantly and unable to trade significantly lower even on elevated volume. So we're going to see that here, and we're going to kind of talk about how we go about taking advantage of that strategy. So even before the open, we get this push to pre-market highs. So going to be seeing, not going to be touching it directly off the open, buying the open and print or anything like that, but just going to be seeing how this trades as we open up. We're open now. There's going to be a stuck print here at 16. Try to ignore that. So now just watching, seeing what levels are going to be important here. For right now, holding up reasonably well. Looks like the 16 may be a bit of a battleground. But again, doing reasonable volume and not really able to trade lower. So I hit in long fairly soon here once this dip gets bought up. Now we get in. I just fill in a small position at 16, expecting this to work immediately. And so we don't really have that follow through to the upside. So if something strange happens here, I'm trying to exit my position.
And I think for this too, Graham, is like we tried this a couple times on, and we were talking through this on chat, just to see if we did hold that 16, but we were in like our tier 1 size.
Exactly, and so I have more shares borrowed here. This isn't the full size I'd be trying to do, and sometimes we will have to take more than one shot at this. But seeing that we're not getting that follow through right now, I think we're going to need more time.
Hey guys, how do you feel about trying to enter around 1575-ish with a stop below 1550, since it's holding up pretty well? One
issue that comes to mind with that is that, you know, the stop is going to have to be a decent bit wider, and if this thing does end up actually going, we probably won't see 1575 again. Now we do actually see this in this trade later on, and we do take that trade you're talking about. But I just wanted to have some size on so that I'm at least getting one tier into the trade before it rips without me if that does happen.
Yeah, Bill, I agree with that too. 1575 was the technical level we were watching, but just go along with Graham. In case we did, retrace near that 1575 level and we did gap and go, that was something we were aware as well. So we were trying to be more careful with our size, and that's what we were trying to do, like a tier 1 entry. But yeah, definitely agree. That 1575 level was a key inflection point.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Okay, so really, if this is going to work out now, like it should have gone by now. So once 1590, the lead gives out, I'm trying to get out of my position, but end up having a bit of an issue that I've never had before with the ECN. ARCA is not filling me on the sell side here. For whatever reason, I've never had that happen. So it takes me a little bit before I actually switch over to EDGX and get out of my position. But you see I'm getting rejected all of my shares right now. So a bit of a special case here. I haven't had this problem since.
One thing we're looking for here too is how we're going to hold up against 1550, and if on our level 2 we're seeing any kind of bids step up. And you'll be able to see in this next minute here that the selling that happens for the first 2-3 minutes of the day just comes to a grinding halt.
Yeah, sure. And you see, even though we broke below that 1575 previous wick low, I mean, we didn't get any real continuation. So now just looking to get in from a better price. Again, looking at this 1570 area for now, seeing if that's going to be the level. And I believe I try it one more time. But again, even the volume we're trading now isn't too significant. It's really no different than what we were trading in the pre-market. The sellers aren't really stepping in to take this one lower. So even though I've taken a hit on it, I still am pretty much liking the idea. So I'm in again, risking a real move below 1570, and we end up getting that. And when that does happen, especially in these low float names, even though this is an SPAC, so it trades a little differently, you do want to be out quickly. You don't want to try and give it any wiggle room, because these do have the potential to really drop out if you're not careful. Have to be very careful with risk management in these trades.
We're not getting the volume that we thought we were going to see here at this 1575 level. It was holding up, but we just couldn't get that continuation.
So we drop out there. Again, no real continuation to the downside though. So, I like to say with these low float opening consolidation setups that I take on the long side, even though we're selling off some, I do view this as quite bullish, because we're not falling off as much as we should be. But we see new lows there, and we eventually drop out quicker than we have all day. Touch 1550.
You'll see that it immediately gets bid up from
Exactly.
1550.
That's where I got very long.
Yep, and so at this point, this could go one of two ways. Really, this could rebid very quickly like it does here, or it just continues and this turns into an all-day fader. All the chance in the world that happens, but the tape gives us the confirmation that I need to take one more try at this trade. And once we see this rebid, it's game on, and I feel quite comfortable with the idea.
And so when you see that rebid, you're thinking, hey, let me buy this against a little bit below 1550 and see if we can catch a run?
Exactly.
Yeah, at least for me, I end up getting like 1580 or something here, and I have a hard stop. I'll have a hard stop at 1549, but then if this thing just holds down below 1570, I'm going to be out of the position if we sustain down there. this should kind of rubber band and snap to the upside pretty quickly.
Yeah, what price did you get? 1580?
Yeah, I'll get it in a couple seconds here.
Just something to think about for that. So that's a bit far away from the mid 50s. So you probably ideally wanted to get in around 15, somewhere in the 1550s. If you have to pay 1580 like that, that's pretty far away from where you wanted to enter. So one of the things that you can do is, all right, I'll buy a little bit at 1580, but bid for some at 71 cents, 66 cents, 61 cents, and then have all of that against below 50 cents, and just try and make the spread on some of those other tiers so that you can improve your price from 1580. Bit of an advanced trading technique, but when you get in at a bad price and you're pretty confident that the overall idea could work and you have a very clear area where you would be wrong, bid for better prices and then make the spread on those better prices, improving your overall price, and then go from there. Does that make sense?
Yeah, absolutely. It's not something I'm implementing right now just because it feels tricky, but it's definitely something I need to be working on if I want to take my trading and the setup to the next level.
100%. So like I do something just as simple as, all right, I get some at 81 cents. I bid for some at 71 cents. I get hit at 71 cents. I try and kick it out at 84 cents. I bid for some at 66 cents, try and kick it out at 79 cents. If I get hit at 61 cents, I'm not going to try and do anything with that. I'm just going to add to my core position from those prices. So great prices, I'm just adding to my core. Other prices, I'm literally kicking it out and making the spread so that my 80 cents on tier one really becomes like 60 cents or something like that.
Another thing I want to keep in mind is that, when I'm thinking about price targets for what I view as a short squeeze trade, really, my thought is that most of my shares should be getting ditched if this works well above 1660. So I'm a little bit more comfortable putting on some shares at 80 cents, but obviously the better your price can be, the more shares you can actually build into that position. And just the better the RR will be. I'll continue. Again, I'm just looking to make sure that we're sustaining at these prices, but now that we're really holding up, I believe I get in quite quickly. One more wash, and then once we walk it back up, I'll be hitting the offers. Yep. And so now we push above 1590, and it looks like this is working properly. We're back above that $16 level, so things are looking good for now.
And here's where I enter my tier two.
Okay.
Just trying to break above the opening or that 16.2 level.
And you see, I offer some at 1633 there, which may be a little bit early. It's only a quarter of my position. Just taking some off before the actual high of day in case we do get that stuff. And then put some other orders for the actual short squeeze move above. So if we do squeeze above 1641, hopefully I can get filled up here in the 1660s. And then holding the rest to see if we can really squeeze higher towards 17. So I will say, given how long we consolidate here, I would expect us to squeeze through highs quicker. And this ends up giving us more of a fight than I was really expecting or looking for. Generally, these fall through to the upside, like I said, like a rubber band fairly quickly. So this does concern me that it's taking this long. But there we go, straight through. And I get filled for half of my position. I'm out now and looking to see how the latter half will play out.
Yeah, when I see a move like that, guys, I'm going to bid 26 cents, 16 cents, 11 cents, just in case somebody wants to make a mistake and hit me on the bid. We're above the intraday resistance levels. It's made a new high. It's showing us we don't know where the top is yet. And so I want to add more, and I'm just going to try and add more at a better price.
Yeah.
So when something makes that new high, I'm going to bid at a price that I think is pretty advantageous to add to my position. And you have to do that, you have to do that instinctively. You might sit there and say, well, I'm never really going to get it. You're going to get it sometimes, particularly in something that has a low float, particularly in something that just moved that violently to the upside, particularly when it's that early in the morning. So you have to get into the habit of, I'm going to bid 26. When it makes that new high, I'm bidding 26, 16s, 11s, and doing that all the time.
And I feel like that's somewhere I could definitely improve, is using technology, just hotkeys to be able to be quick sending in those orders. That's usually my issue with that, is trying to do it too much manually, setting these orders 20 cents below, hoping that I can get filled. So that's something I need to be working on the technology side.
And so as we go up, I'm scaling out as well.
Yeah. I'm down to a quarter of my position, and now that the short squeeze has really happened and been confirmed, I'm not looking to swing this idea. Instead, I'm looking to see, are we going to go limit up? And you see that above 17, we actually start stalling and we can't really go limit up. So pretty quickly, I end up getting out of my final shares, because if this is going to fall through and go limit up, it should happen immediately. It shouldn't be taking this long and consolidating.
And I believe this is where the tape really changes to the 17 level.
Mm-hmm. And you see, I just got out of my last shares at 17. We just went so vertically that it seems like we may need to have some relief to the downside if we're going to go any higher. So that's important for these trades, is just trying to gauge that momentum and where it's starting to turn around in these short squeezes, not overstaying your welcome in your position. And Ty, I believe you were flat here as well, correct?
Yes.
Yeah, when you see something vertical like that, you want to pay attention to how they're paying the offer and notice when they stop paying the offer as aggressively, and when they stop doing that, take some risk off the table.
And above 17, there wasn't a continuation in volume, and so we were really watching above those levels.
And you can even see here with this indicator we have on the level 2, I mean, on the squeeze bar, almost all the volume being done on the offer. On this turnaround bar above 17, almost all the volume being done on the bid, as all the longs are getting out of their positions.
And we saw that in Piton today on the open, right? We noticed the way they were paying the offer, and then they just stopped paying the offer at a particular price, and that happened to be a shorter term resistance area. Super important to take a look at how they're paying the offers on the tape and noticing when they stop.
So we can let this play out a little bit. This ends up actually being the top, and it sells off from here. So I didn't get involved for any more. I tend to think that I don't want to get short for names like this right now. I struggle with the risk reward of the trades, but something I'm looking into for the future. I know Matt took advantage of this.
And there we just see 16-8 break.
Yeah, and we haven't seen a dropout like this in the name all day.
And our thought process here is we're above the pre-market highs and all-time highs, so we want to see, find a direction where this could really run to.
Mm-hmm.
More just sitting on our hands at this point.
Yeah, and so I don't by any means think that the play is over and that this thing is just going to fade the rest of the day. But I am thinking, if I'm going to get long this thing again, I want to see some consolidation, above these opening prints. I want it to show me that it still has strength and stop showing downside.
I do think you have a trade decision there, particularly around that 30 cents, 26 cent area. When it pulls into 16, 26, 16, 30, to just dip your toes into the water and buy a little bit, and then really wait for the turn to potentially add back. I mean, it's entirely possible that, because it's so early in the day, it's entirely possible that this thing stalls out and isn't going to trend for the day. But we did just see this above 17, near 17.25, and it just pulled in a point in a stock that's above the opening range. And so you may want to think about, for your trading strategy, dipping your toes in there into a really steep decline and adding that to your strategy. Best strategy is you see a turn and you save most of your risk for that. But I would have been pretty tempted to buy a little bit there, right on the bid at 26 cents. Anyway.
So I'll just fast forward this. We end up not seeing much life in it for a little while. The tape just keeps rolling over.
And we fade all the way back down to this 1550 area, where for a minute it's also VWAP, and for a minute it looks like this might be defended. But once we flush through there, that's it for the rest of the day, pretty much.
And that's why you dip your toes in and you wait for the real turn, as opposed to just really buying a ton based on price.
But yeah, that's essentially it for this trade.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.